Everyone, George here. So in this video, I'm going to share 2 mistakes that the average person makes on their credit report that will cost them thousands of dollars worth of interest when buying a home. You don't want to miss this. Stay tuned. Hi, welcome back. So let's get right to it. These 2 mistakes I constantly have seen over the years as I've helped people build a phenomenal credit and then ultimately show them how they can ultimately invest in real estate in the US or abroad. These 2 mistakes, I promise you, you will probably think that they are the craziest mistakes that you've ever heard of. You'll probably even think that these tiny little 2 mistakes will not hurt your credit. Definitely stay tuned and watch this video because it's very serious. All right, so let's get to it. You're probably saying, George, let's do this. Show me the mistakes right now because I want to see them. Here they are. Number 1, late payments on any account on your credit. Yep, late payment. Now, what's considered a late payment? Any account over 30 days that is reported to your personal credit will be considered late if it's above 30 days. And therefore, the creditors can report this information to the credit bureaus. And you do not want that to happen when buying a house, or even if you're not buying a house at all, because it will cost you anywhere from 30 to 100 points and more sometimes on your credit. You will see this. You will see it drop big time. And depending on the credit profile, depending on how many accounts the person has, how long those accounts have been open for, how the accounts have performed over the past few years, and other small little tiny things that these models take into consideration. Depending on all of that, they will determine how much the scores will drop. And so what I've seen in the past is, as an example, a great friend of mine was about to buy $1 million+ building in New York City and had excellent credit. Only had 3 or 4 accounts, so he did not have what we call a PIC credit profile, which in the very near future, I'll make a video on that. He had a very basic 10 credit profile, and he went 30 days late on a very small balance Capital One account. He forgot to pay the bill. And unfortunately, that little $25 payment cost them thousands of dollars in interest within the first 24 months. Because 1, the value of the property was pretty high, but 2, the interest rate that he got was no good compared to what he was going to get. Tiny little fraction, percentage, makes a big difference when you're talking about thousands worth of dollars of loans. And so you want to be very careful with late payments. They can hurt you big time. And I will be sharing in the coming videos on how to deal with late payments that you weren't at fault at and how to correct that information. We'll deal with all of that. But for this one, stay away from late payments. All right, so let's talk a little bit about mistake number 2. Mistake number 2 is another one that I constantly see over and over and over. And actually, I've seen it to the point where, unfortunately, some of the loan officers that are helping some people get a loan for a house, they may not tell them this little fact that can help them get a better rate. And here it is: high utilization on credit cards and or even credit lines. Anything that has a limit to it that you can use and repay, that has a revolving limit, typically you don't want to max any of this out. The only thing that is excluded from this, which I'll again make a separate video on, is home equity lines of credit. They are a little distinct because the mortgage scores, the models that look at HELOCs, usually will treat them a little different than your average account, than your average credit line out there. So other than that, stay away completely from carrying heavy balances on any credit card out there. The top tier in terms of high performance people out there who have some of the best credit reports in the USA keep a balance below 7%. These are the high FICO achievers, as some people will call them. Less than 7%, very high scores. Typically, you want to stay away from credit card debt at all, just completely. Now, there is a small little tiny little trick out there that helps depending on your credit profile. You can normally keep 2% on one card, pay off all the rest of the cards, and you will typically see your score jump a little bit. And that can be anywhere from 2 to 7%. It's the same thing that works. But typically, I tell everyone just stay away as much as you can from it, because you ultimately can pay a lot of money in interest because you're carrying a 20, 30, 40, 50% or more utilization. Now, with that said, there are some people that are a little confused on what utilization should be kept. I just touched on it. Average high achiever is less than 7% utilization, but you'll hear this 30% ratio being thrown out there. You'll even hear banks throw this out. Well, as long as you're on the 30%, you're cool. I will tell you guys personally, I don't follow that because I don't want to owe them any money like that. Plus, just keep the interest to almost zero if you can. And in addition to that, if you go below 7%, your scores are going to be great, right, over time, if you're building credit too. So you just want to stay away from that. Banks, of course, will tell you 30% is fine and they make some money and they're happy, but not necessarily good for your pocket. Anyway, let's get right into how do you now fix problem number one. Well, problem number one with the mistakes that we talked about in terms of being late, you want to set up your account on auto payment. It's very important. Number two, here's something that has worked extremely well for me. You want to have a separate account just to pay bills. I recommend if you have multiple cards out there that you're constantly using for points or for whatever reason, you want to have a separate account and just keep sufficient funds in that account to pay your bills. That has worked extremely well, and I've seen it work for a lot of people who are constantly trying to get points and they use different accounts to do so. Some people love to just consolidate everything to one credit card, personal credit card. That also works, but you want to make sure that bill is paid. Second, make a spreadsheet, a very basic spreadsheet, and make a list of the accounts that you have to pay. And here's something very basic. Look at that spreadsheet twice a month. Yeah, twice a month, on the 15th and let's say on the 30th. And I promise you, you will never again go late on anything. This is what has worked extremely well for people who I've noticed who constantly were late on accounts. Just make a list, review that list twice a month, and make sure none of these accounts are late, because things can happen, right? And the good thing about this is you can pass this list on to someone who you trust in the family, say a husband, wife, whoever it is, and you tell them, look, here's a list of the things that I normally pay on this, on my credit, and I just need you to please, if something was to happen, if I'm in the hospital, if there's an emergency, please just take a look at this for me. And yeah, so that will help you stay out of trouble. Make sure, guys, that you don't wait till the last minute to look at your credit when buying a house. Make sure you're working on this stuff 6 to 9 to 12 months before you even go into buying a home. I am going to add to this video, at the end of the video, a link to the video that I did on mortgage scores, on how to properly understand mortgage scores and exactly where to find it. So please take a look at that. I hope to see you guys on the next video. Until then, subscribe if you really found some value here. Please hit that like button. It's going to help my channel grow. Take care. Ciao.